Everyone always talks about when to buy crypto, but the truth is, your profit isn't made when you buy, it's made when you sell. But knowing when to sell, that's the tricky part. Sell too soon and you avoid massive gains. Sell too late and you watch your portfolio disappear. In this video, we're going to discuss 5 easy to understand but powerful indicators that professional traders use to determine when the bull market is overheating, so that you can protect your gains, exit smart, and avoid becoming exit liquidity for whales. Welcome back to Binance Breakdowns, where we make crypto easy, fun, and actually understandable. These indicators are beginner friendly but battle tested. So whether you're new to crypto or if you've been in the game for a while, you'll get value from this video. First up, exchange inflows. When big holders, otherwise known as whales, send large amounts of crypto to exchanges, it's usually not because they want to show off their wallet balances. They're preparing to sell. Online analytics platforms like Glassnode or CryptoQuant track this kind of data. Historically, a surge in exchange inflows is usually followed by a big sell-off. It's kind of like watching the storm come in before the rain starts. So, if you see a spike in exchange inflows, especially from whale addresses, you might wanna, start selling. Next, the Fear and Greed Index. This is a simple score ranging from 0 to 100. When we're in single digits, extreme fear, people are panicking. This is usually a good time to buy. When we're in the 80s and 90s, extreme greed, the market is euphoric, and retail investors are usually throwing in their life savings right at the top. Smart money usually sells into this hype. As Warren Buffett puts it, be greedy when others are fearful, and fearful when others are greedy. You can easily check the Fear and Greed Index on Binance Square, Binance's built-in social and news hub that brings together market insights, trending crypto discussions, and community updates, available on both the Binance app and desktop. Number 3, Google Trends. Google Trends is a free tool offered by Google that shows how often a word or phrase is being searched over time. It doesn't give you the exact numbers, instead it gives you a score from 0 to 100, with 100 being the peak popularity for that term. In crypto, this can be a surprisingly powerful sentiment indicator. When terms like how to buy crypto or how to buy Bitcoin peak and get close to that 100 mark, it means that retail investors and FOMO are usually peaking. Historically, this peak is often followed by a significant market pullback. We saw this in late 2017 and again in 2021. Next, the RSI or Relative Strength Index. The RSI is a momentum indicator that measures the speed and size of recent price moves, scoring them 0 to 100. A score of above 70 means that the asset is overbought. Think about a rubber band being stretched. Eventually, it has to snap back into position. A score of below 30 or oversold means that the asset might be undervalued in the short term. In a strong bull market, the RSI can stay well above that 70 mark for an extended period of time, days, maybe even months. But historically, an extended overbought period is often followed by a significant pullback. On Binance, you can easily see the RSI in the advanced trading view. Just go to Indicators, search for RSI, and then see how close your favorite coin is to that critical 70 mark. Next, and this is an easy one, when the price of a coin goes straight up in a short amount of time, it's exciting but dangerous. Markets can't sustain that kind of growth forever. Think back to April 2021 when Bitcoin went from $30,000 to over $64,000 in just a few months and then pulled back by over 50% shortly after. Now, none of these indicators are perfect on their own, but When a bunch of them start flashing red at the same time, it's usually a good indicator that the bull market is nearing exhaustion. You want to plan your exit before the peak, not during the panic. If you guys got any value from this video, subscribe to the channel for more content like this. We'll see you in the next one.